This is Justin AMZN on Wednesday, April 18, 2018. The pre-market today and the close yesterday after hours, from the close after hours into the pre-market this morning, a continued move higher, gapping up, opening up, or coming right back down into our 1514 price level. This price movement in the aftermarket and pre-market looks really similar to me to this down here. We closed on Monday down a little bit here. It chopped sideways, moved up a little bit, crossed through a line, came back down into it, and stayed pretty, yesterday's pre-market bounced there, pulled back with a bearish candle, didn't even come back down to it. Today, we've got a very similar move up through a line that we've had established, just like this one at 1455. Came back down into that line, and we didn't have as much of a bounce pre-market, but in the first 5 minutes, we have a very similar candle to this opening candle. It is a bullish candle. It's got some selling and some buying back up, ends up closing higher into the same range. Just like yesterday, we were selling and buying back up into the same range for the body of it here. And then for yesterday, we were able to set it up with a trade above, a trigger above and a stop below. And today, because yesterday was a bullish gap and go, and then opened with a bearish arm and a candle, which was just a great place to get in and don't look back. Today, this is a bullish retest gap because of the bullish move yesterday, gapping up, and you want to give some more room to be able to consolidate, pull back, do something, give us a little more of an S curve, because there's nobody trapped today. I mean, except for a couple of these bears way up here. There's not very many people trapped like there were from Monday into Tuesday. So here we are looking at the Wednesday open, and we want to give this a little bit of room to do some movement, look for a good place to get in bullish. Again, bullish because it's moving up. It's been pretty clear that it's doing that. So the next candle throws an upper wick. We're not into this yet. We want a little more of a rest. We don't want to rush into it. But anybody who did, there was some opportunity to get in here and get a quick gain. $10, $12 move here. This is an inside candle. And this is something that, even though this looks like it could break, we're still not going to take that. We really want to have some bearishness come in, just something that's going to pull back, and we end up getting this candle. So this looks like an evening star reversal, and comes right back down into the 1514 price, 1514.06 there, and then actually pulls back a little bit more, and it's like, okay, this is great. This is what we wanted to see. Somebody could have gotten set up here with buying right at 1514 and a stop below here, maybe below this lower wick here at 1507. Pre-market, there wasn't any volume or anything on this candle. There was not even 3,000 shares on that, and then you got this candle, which you have 251,000 shares. So you want to give this some room. If you're going to buy here, maybe a stop down at 1,500. That's still $14 of risk on something that moved $50 or so yesterday. 40, I didn't even calculate what it was. Close to 50. We'll say it's close to $50. I'm sure I could go look at the daily and do the math real quick. But anyway, so you'd want to be a little more conservative on the setup because it's a retest gap. It's a bullish retest gap. You know that it's whatever it's gonna do, you want it to retest a little bit more. You can get in on the retest. We're losing our volume pretty drastically here. There was there is a squeeze forming. We're losing the bullish momentum here as well, taking our step forward, and okay, then that looks like it could bounce. So if you weren't in here, maybe you could get in bullish with a trigger above around 1521 and a stop below maybe at 1511. So that would have been about $10 risk. And that could be enough of a pullback. It could bounce right here. This is a Morningstar reversal now. Could totally work. There's an inside candle, which is even better to say, okay, we're going to get in above that. Now you're trapping the 3 bearish candles if you move higher. And let's see the highs here, 1520.20 and 1520.17. So 3 cents away from a tweezer top. Again, just a great place to trap some folks. And instead of triggering bullish, it actually comes down and takes out this low. Now we're relative to this low. And okay, maybe there's a little more of a pullback coming in on this, some more rest. Pull back down into this level, 1505, 1504.11 is the low. And just like we came up into the 1500 exactly. Yesterday's closing price was a little bit above that. The close here was 1503.63. We nearly came back down and retested that close. We retested the last 5-minute candle. This was at 15. The high was at 1504.41, and the low here was 1504.11. So by 30 cents, the bears pushed this down into the closing candles, the last 25 minutes, and into the closing candle itself. And we've talked about on some of these small candles, somebody could have very aggressively gotten in, on a pullback here into that body of that candle with limit buy at like 1504.50 and a stop at 1501.50, $3 risk, and been very aggressive. I wouldn't recommend doing that. At least get your stop below the 1500 price if you're going to do something like that. But still, 1505 by 1500, 1505 by 1498, something like that. Be really aggressive, getting in a pullback, taking out this low, coming back into the aftermarket from yesterday. This would have been a great place to buy. Some people were buying here. So some of the folks that saw, okay, we retested into that candle, they're buyers. And you get a little bit of an increase in the bearish volume. We've got a bearish move in the momentum. It looks like, okay, maybe this will just continue on bearish, but we're still keeping the mindset of we're bullish. And then we put in a very small high wave candle, inside candle for the previous one, and a range on this of under $5. So this was a range of $3. Here's a range of $5 on this day where you could have traded or set up something 1510 by 1505 and walked away. And if it triggers you in bullish and moves up, great. If it stops you out, okay. And that would have immediately moved higher, hopefully triggered you in, and looking like a very strong Morningstar reversal. We're losing our bearish momentum now. Come right back up into the 1514 price on both of these again, and now we're continuing up a little bit higher. So if you're waiting for a close above this price, here's your first close, and you may be in up here, trapping anybody that went bearish here. So maybe you're in at 1518 with a stop down here at 1504, 1504, and you can move that stop up at least under this candle. And you got an inside 5-minute candle. I'm going to zoom in on this some more. So an inside 5-minute candle. This is some bullishness coming in. Not quite retraced as much as the bearishness that came in earlier. But this is a nice consolidation here. If you're not in yet, getting in bullish above here around 1518 or 1519 with a stop down at 1513. That could have been a good setup. And we'll take another step forward, another inside candle, mostly inside, and then here's the breakout. So once it breaks out, having your stop down here on 1513, and you look for places to move your stop. And we've got bullish momentum now, still have that squeeze forming. and now we moved up again. We broke past this tweezerish top here. This is the highest 5-minute close on the day because we had the selling come in on these 2 wicks. So anybody buying here, you would have maybe a couple candles here saying there may be some selling, and our squeeze has triggered. But after 1, 2, 3, 4, 5, 6, 7, 8, 9 bullish candles, 1 bearish candle, that one I still count as bullish, but the open and close were the exact same amount. So it's not negative, but it's also not positive. So maybe get a little bit of a pullback is what we're looking for. Now here's another push higher through this high. I'd still like to have a little bit more of a pullback, but this consolidation, this 20 minutes here, even 25 minutes if you include this candle, this is a great location to have something slow down, pause, some indecision here, and then break out with a 1519 by 1513, and you're already up close to 1R up here, and it just kind of continued going up for a while. So got up into the 1528 price, and I don't think I extended my 1528 line. Let me see. Yep, so I did not extend my lines for this video, and I apologize because we're in the range of this already again, and so it's relevant again. That's why I didn't delete those. So while we're at it, I'm just going to go ahead and extend the 1578.25 line and see, hey, there's a chance it could do that. Okay, ignore that candle. We're going to go back into the 5-minute. Here's our line. Okay, we came right up into our next resistance. So if you've gotten in 1518 by 1513, you could have gotten out up here for 2R. Would have been a great trade, and right into a known resistance or a known price level that may act as resistance. Looks like we made a little bit of a evening star reversal here, rejecting it, and could trade back down to this level, where the wick was, but that's, again, just not very far for it to move back down. But it does look like we overshot it and we came back a little bit. The bullishness on the squeeze completely ran out. It definitely pushed higher, and it's just going to chop around for a little bit. That's really all this squeeze means, is once those bars happen, it doesn't mean you're going to stay so strongly bullish. It just means you're going to wane in your momentum, and it could mean a pullback. It could be sideways. It's just not strongly bullish anymore. And that's what ends up happening for a little bit here, and then a push a little bit higher, a couple dollars higher. This didn't have as strong of a move as this consolidation here. You were able to maybe do a trade with this candle and a pullback, maybe getting in above the high here of 1520, maybe 1529, and you pulled back into 1529 exactly right here with a stop down at 1525. So $4 on that, and you're up, half an hour up here. But that wouldn't have worked because you wanted to consolidate a little bit more right here, similar to the pre-market did at the 1514 price, and then did it again a little bit pre-market. But this one, it pulled right back into the 1528 price, and continuing to lose the bullish momentum. Now we're below it again. Now we bounce above it, and all of this is just a great example of chopping around and not being very directional because we lost our squeeze momentum. Now here we are forming another squeeze, and this time the momentum is to the bearish side, even though we're slightly above that line. And all of this, this is a $5 range. You look back at this move and the move we had yesterday. This is just the most sideways chop we've had, and kind of surprising that you would have this much on Amazon, which has been so strong since yesterday. So this is a little bit more of a pullback. Now here's where, I said this evening star reversal. Now look back at like this evening star reversal coming down to here to this low, bouncing, coming down to this low from this bearish candle. We just retested the second 5-minute candle as old resistance, new support, old resistance, still resistance, new support here, and then bounced here, and a little bit more of a pullback here with a great buying candle. Let's see, is that a shaved top? The high and the close are the same. So yeah, it's a shaved top 5-minute candle. You could easily have just traded this with a trigger above and a stop below. But again, you only have a quarter of an R or a third of an R to get to the 1528 price. So not a trade that you want to really take. And then, it just kind of chops in here. Maybe getting in a pullback, but I just don't see any conviction in this move here. And we're getting late in the afternoon. We push right back up into our previous highs here. So these two candles, 1533.33, were a tweezer top, and then this formed a evening star reversal. And then we push a little bit past that 1533.80 here on this candle. That acts as kind of a larger double top. So here's one of the tops, comes back down and then comes back up to another top, and now it's coming back down. Our squeeze fired, but it's 3 bars in and it's already lost a bunch of its movement. And we just continue to chop the rest of the day, and just to pull back slowly. Didn't quite get back to 1528. Bounced a little bit here, but then that just got sold off. So somebody could have made some money from this move, from selling at a previous resistance, selling back down into maybe this candle, or definitely into the 1528, but held on a little bit longer. And I think we're almost in the day. Yeah, so we recovered right back into the 1514 price, the close on the day, or the 1528 price. Excuse me, the close in the day being the 1527.85. I mean, the way that we've played according to these levels, and we lost some of the previous 5-minute candles before all this, but these lines, this being support here, being a good place to pause at 1500, opening and shopping right around 1514. I mean, 1514 was the neckline today. It was the neckline for this quick double top that never retested, and then just came down, sold down, and then rallied up from there. And so, we rallied up to, paused at 1528, pulled back below it, rallied again, came back to it, chopped on it, started to roll down, bounced, consolidated on it, rallied through up to this this high, earlier high in the day, and then came back down to it, through it, and recovered to it. So these prices are just key, seeing this. And there was a couple things you could have done later in the day to make a little bit of money on these smaller moves. So we'll move into the options to see what you could have done anywhere in here. And so we first look at the call. We were looking at the 1525 yesterday, I think. And so I just wanted to kind of take a bigger picture. Monday, somebody could have bought that for 28 bucks, and today flipped it out for 1,800 bucks. So incredible move on Amazon. If you just bought a couple days ago, not knowing it was going to bounce, or even bought yesterday morning where the bounce had started, and just held on into today. The one other thing I will point out, back to the 5 minutes, is it's gapping up again. This is a much more, so looking back at the closes of the last 2 days, so this day closed and did this S-curve kind of thing up, came into a line, went up. Today or yesterday we ended with, pulling back, going up, a little bit of S-curve up into the new line, or an old line, 1514, and then today aftermarket looking like it's not going to just meander higher. It moved higher. it already excuse me, put in a bit of a S curve, and now it's a little bit higher now still. And I would anticipate for tomorrow's open to give us something similar to a little bit more of a pullback. We have either of these lines to pull back to. We've got this one for 1540 and then this one for 1528. If it comes back into 1528, look for a reversal candle. Anything like this where we have indecision, Morningstar reversal, you have a long lower wick on a bearish candle, getting above the high and a stop below the low. And that's what I would suggest to do. But evaluate your own risk and see how aggressive you are for what you want to do. If we come back into today's candle and look at the moves in here, so in this candle at 9:15, maybe you got in bullish above the high and bearish, or stop below the low of the previous candle. So that was at 9:15 Central. We go look at the 9:15 time on this option, and it was forming this inside candle here. So you could have gone in at, let's say 8:50 above that candle with the stop down at maybe 6:50. So that would have been $200 risk to take this trade down at 8:50 by 6:50, and it just worked. And you could have easily moved that up with a $200 R. Move that. On this first move, flipped it out at 1650. So that would have been, let's see, 1650 minus 850, right, is 8. And then divided by 2 is 4R. So that would have been a 4R move. Just hold on for that ride. If we take a step up and look at like the 1550, so this one somebody could have bought on Monday for $10 and flipped out today for $757 if you got the high. But we're gapping up again, today. Oops. Gapping up again today aftermarket. And if we happen to open up in here, the 1550 call is actually be in the money. And it's going to, the value is going to just skyrocket because it gapped up so high. So 1550, I would anticipate this opening tomorrow, trapping all these people who shorted it on the option, but I would expect it to open probably around 14, maybe 12 to 14 bucks on the open. So we'll have to see what that actually does. You're only a few dollars in the money. If it stays at the 1556 price, you're $6 in the money. But that move is going to push that premium up for the market makers not wanting to just give so much value to the options. But there were some places that you could have bought something in here with this open. So yesterday's closing price was $2. You could have waited for this to come back down to 2 and wouldn't have been triggered in, or waited for it to come in to, something like 225 by 125 or 250 by 150. Any of that would have worked here. The low on the open candle was 237, so you could have had the same trade, 250 by 150. That would have moved up, flip that out pretty quickly, a little bit longer, pull back into the same, a little bit lower, but really relative lows on these candles that you could have just bought and just held on to with any kind of $100 risk, or even if you're getting aggressive, you could have done it with maybe a slightly smaller than $100 risk if you understand how this moves and where you would anticipate having some small candles or having some movement, or going even another step out to the 1575 call. And this one, you could have spent $60 at the open or on the pullback and flipped it out for probably triple, 3 times what you put into it. And so let's see, 2 times. Like, let's say you got in at 60 and out at 180. You made 2 times 60 on that to get up there. And so even going out this far to 1575, just let's see. Oh, I'm already zoomed out. Just yesterday, this was 4 cents, and now it's 50 times larger. And a gap up again tomorrow should open up higher still. And any of these would have been great to just, speculate, which some people do, but also to get in on any of these pullbacks or the open. These were the lows of the day until you got into the very end of the day, the close here. The one other thing I'll go over is on like a move here where it reversed and then did so again here with this candle, this bearish candle. Let's look at what you could have done to the bearish side, getting in on the 155 candle with a stop above the 150 candle. But we're looking at puts, so we'll look for the put to go up in that area. So 155 is over here, and the 1500 put was too far away. It didn't do anything. It just went sideways, and some people may have been doing that. You would have had to have a put closer to the strike or even in the money if you're going to do a play like that. This is the open here, so you can see there's some clear positive candles on the option, but this would have been something you could have gotten above the high and stopped above the low and taken it to 2R on the option right here for that kind of a bearish move. And that was after these wicks here that it was going to move down and, went up on the put, but down in the stock and down in the calls through here, and then, got down at a known level. So that's how you could have played this a couple different ways throughout the day. As I said, seeing this move up so quickly, take a step back and look at the hourly. We're rivaling all of these other candles that we had been breaking down from. It's possible to get up to 1578 this week. I'll say that's a definite possibility. We've had 1, 2, now a third gap up, but the move does not have to be over. It's had, even on the hourly, it consolidated today for a good chunk of the day, and now it's gapping up. It's trapping people on that hourly candle and trapping people here. It's trapping people who shorted at this level thinking, okay, that's it. I had a neckline there before. I should have paused at this level, the 1500 level, because that's where I paused before and then broke down. But now people are loading up, especially after this consolidation. And I'll look at the 4 hour. Let's see what that looks like. So, we had that breakdown, looked like a retest, looked like it was going to roll over here, and it didn't. It just kind of chopped around for a while and just consolidated here. And so this is a really bizarre looking shape, but you have a left shoulder, a head, a right shoulder, and then it breaks out and doesn't retest back down into the 1455 price at all. It just goes. And so we've closed the bearish gap here. We're approaching the high of this candle, which was 1565. That would be a good place to look for some resistance to come in. Just a large bearish candle connect as some strong resistance, and right back into the center of these triangles that ended up breaking down. So this could still be a place that it pauses, comes rolling back down to any of these levels, and there could be a good time to make some money on that. Alternatively, if we just continue to push higher, we need to break out from these candles, get above the 15, 15? Why is this not? There we go, 1578 price. That could be a good target for anything that you're still in. But we want to see it push above it, retest, like an S curve, come back to it, and then start to rally again for this to continue to move higher. But with the move we've had in the last 2 days, phenomenal move from the 1440s all the way up to looking like we're going to open the 1550s. That's over 100-point move, and it may not be done. So Had that happen over some more time here, had it happen similar timing here. But this is what I would look back at, seeing, okay, we rallied really hard, came right up into resistance, known resistance. That's what I would consider 1578 price, and then a bit of a pullback, and then break out, come back down. So look back at these days in what was this, mid-February, to see what this could potentially do up at this price. If we end up gapping down, that means that the bears will have a little bit more of a move to sell from how bearish this candle was. But then we'll just look for some reversal candles to go back up the other way, and look to get out anywhere up in here if you're in bullish on calls because they're making you money. So if another gap up, they'd be pressing your luck to have 1, 2, 3, and then even another fourth gap up into Friday. It's entirely possible, but we just want to protect what we've got earned here. So hope this is helpful. This is Just an AMZN.